Howdy, Hot Shots Dividend Daddy here, your favorite not a financial advisor with not financial advice. ULTY is getting hammered again today, down almost a full 3%. So I'm down, like $700 on the day. There's no way the distribution is going to make up for that this week. I had hoped that we would climb back to $6, but I don't see that happening. Seems like the whole market was in a sell-off today because I'm just looking at a sea of red and bleeding green. But it's one of those things that we said you can't foresee, right? The Trump administration broadened their tariffs. They're trying to get a stake in Intel based on grants that the Biden administration gave them. So that might be spooking some investors too, going, hey, wait a minute, if the government takes over part of these companies, that's not a great idea. Even though I don't think they should be giving them money in the first place, all right? You got to make money where you can make it. But I think the government should stay out of all this business. We should have a free market, and we haven't had one for a long time. And this is the kind of stuff that happens. That manipulation doesn't come without consequences, all right? Now, ULTY has been this price before and has been able to move up from here. So it is possible that it does rebound eventually, or it does level off and continue paying us good distributions. I did not buy any extra ULTY today. At these low prices, it does seem appealing. It seems like I can't miss at this price, but you never know. What I did put more money in today was GDXY. That fund has been a little bit more rewarding for me so far, and it was down to, I do believe in the future of precious metals prices because of inflation. They tell us inflation is low. I can't remember what the last number was. Was it 2.7, 3.7%? Whatever it was a lot lower than what you and I see at the grocery store. So I don't believe them one iota when they talk about the low inflation, because they eliminate the things that we have to live. So silver, gold, precious metals, commodities, those are things that hold their value during inflationary times, which I still think we are in. Now, you got to make your own decisions. If you're going to place the bet, you got to do the vet. All right, but I put a little bit more money in GDXY. What had happened is that Elanco put covered call that I had told you that I had sold. My Elanco got called away, so I had an extra $1,500 sitting in my account. Decided to put that in GDXY, which has currently about a 52% yield. Now, what I think is happening is that retail investors are running from ULTY, they're running from GDXY, they're running from Yieldmax in general. We have seen some institutional purchases. We'll talk about that again later. But what I have noticed, and I told you guys, I don't think it can go down dramatically below the NAV, okay? Because it's just not an efficient market if that happens, and people will see that there is a value to be had there if it's trading below the NAV. And it is trading slightly below the NAV. It's like a 0.12% discount. GDXY, I think, was like a 0.16% discount to the NAV, which means that if you were to go buy all of the holdings of the fund, it would cost you more than buying shares in the fund. So you get it all neatly wrapped in a package and you get a discount. So I do think that relative to the NAV, and I'm not saying that it can't keep going down, but relative to the NAV, ULTY and GDXY both seem like good deals right now, okay? It's like they're on sale a little bit. Can they go down further than that? Obviously, anything is possible, but I think that's why you saw yesterday such a tight trading range. I think that retail investors started selling off, and then it got driven down below the NAV slightly, and that's where the institutions stepped in. Or maybe even ULTY itself, maybe they started liquidating positions and putting money into the market that way to buy back shares. I'm not 100% sure how that would work, but they can't let it go down. It can't be 50% of the NAV, because then you get a 100% return immediately when you buy it. And so we saw a real tight trading range yesterday. Pre-market, when the big players aren't in the market, you saw it taking a dive. It was down to like 584 or something like that yesterday morning before market hours. But once the market opened, it went up to 590 to 591, and it just sat there because that was a little bit of a discount off NAV. And I don't think they would let it go down that much more. Now today, stocks were down, so the NAV is going to be a little bit lower. but I still don't really believe that it can consistently trade at a big discount to NAV. So whenever you're buying something, if you're buying it below NAV, it seems like a better deal to me than when you're buying it at a premium. And ULTY was a premium the last couple of weeks. Whenever I looked at it, it was at like a 0.2% premium to NAV. Now I look at it and it's 0.12% below NAV. And so it's a little bit on sale. And in my opinion, the way that that's probably happening is retail investors are getting scared. They're dumping it. People are realizing they're not making out on it the way that they feel like it was advertised, because it had an 88% yield and 85% yield, depending on what price you bought it at. And that's what they expected to get out of it. And they're not getting that. In fact, the NAV has been slipping more than the yield. And that's not really acceptable no matter which way you cut it long term. Now, short term, things do fluctuate. So I'm still holding my shares, still going to get my distribution and reinvest the drip. But I did put some money in GDXY. I've liked that one. I like the idea of having gold as an inflation hedge. Now, what you need to know is that they are creating synthetic long positions, or they're selling naked calls and puts. They are not holding GDX directly. Okay, so I do have some shares of GDX in one of my IRAs, and it has performed okay. It hasn't performed to the extent that growth stocks have, but that's nothing to say that it won't over the next few years. Growth stocks could be completely flat, and GDX goes up 10% a year. So you just have to diversify and hope that one thing is doing well when one thing is not doing so well. Unfortunately for me, in my accounts today, nothing was doing well, so it didn't really look all that great. And that has to do that had a big impact on the crypto market too. I looked over at my crypto portfolio and it was down probably 10% today too. So things were not looking great anywhere today, although I will say that ULTY took a bigger hit than the broader indexes today. That's something we didn't see a couple of weeks ago. A couple of weeks ago when we saw the indexes get hit, ULTY was down about the same percentage. Today, it's like twice as much. The QQQ was down like 1.3%-ish or something like that. I can't remember. I've looked at a lot of numbers. But ULTY was down significantly more than that. So the stocks, those volatile stocks that ULTY holds, they really got hammered today. I have an AMD position. That one got hammered. I have IonQ. That one got hammered. Some of that stuff was down more than ULTY. ULTY was down 2.88% last I looked. And a couple of my positions were down 5%. And those are what I would consider good stocks. So really, it's just been one hit after another on ULTY the last several days. Target did do okay today. I think that my SCHD did okay today. I think that what we saw was a little bit of a flight to safety, a flight to something a little bit more conservative. And even though Target's been getting beaten up, it's a retail brick and mortar store that pays a dividend. It's fairly steady over the years. SCHD is made up of larger cap stocks that pay a dividend, and it's been relatively steady. So I think we saw just a little bit of a flight to safety. And honestly, I'm a little bit surprised that gold and silver didn't do good today when you see that flight to safety. But everything takes a hit when something gets hit this hard as it did today. Is that going to continue for the rest of the week? Well, a lot of times I notice that Monday will set the tone, so it's possible we go down even further than that. I'm interested to see if it can get down below that I can't remember the exact price that I said that I thought it could get down to, considering the puts that they had, 550 something-ish range. I'm interested to see if it can go below that. Obviously, I hope it doesn't, because I don't really like watching my NAV erode, but it's still an interesting thing to watch. How low do you think it will go? When the market rebounds, do you think it'll rebound quickly? What are your opinions on what's going on with ULTY, and what funds were you picking up today on sale? See you, D-Gens.